Hey, just popping here real quick. This podcast has a disclaimer, and so the content presented in this podcast is for informational and educational purposes only. The views and opinions expressed by the hosts and guests are their own and do not necessarily reflect the official policy or position of any affiliated organizations or sponsors. Mark Kashar is registered representative of and offers securities and investment advisory services through MML Investor Services LLC. Member SIPC, www.sipc.org, supervisory address 13455 Noel Road, 20th floor, Dallas, in Texas, postal code 75240, with phone number 972-246-1800. Registered representatives do not provide tax and or legal advice. Clients should confer with their qualified legal advisors and appropriate for their specific estate planning circumstances. Got it? Perfect.
Hello, my beautiful friend. Welcome to A Time to Care, the Caregivers Podcast. I'm Isabel Melgarejo, your host. And today I have Mark Kashar with me. He's a financial advisor, and he's probably one of the biggest promoters on insurance, any kind of insurance. So welcome, Mark.
Thank you, Isabel. Great to see you as always.
I know I missed you this Tuesday, but I promise to be better next time. So what can you tell us about yourself?
So I am originally from Houston, went to college in Austin, the University of Texas, and did a master's in international business and economics at George Washington in D.C. After that, I moved to New York. I worked as a trader, trading stocks on a trading desk for 2 years. Got tired of living in New York and wanted to move back to Texas. So moved back to Dallas, where I am in 1998. Worked on another firm's trading desk for about 8 years until they closed down their trading operation. And that's when I started as an advisor in 2006 with Spectrum Financial Group. So the insurance that we do is life insurance and disability insurance and long-term care planning. Certainly, we help folks with college and retirement planning and big picture financial planning as well. And I've been with the same firm since 2006. Love what I do and get to meet great people, and get to network with folks like you and awesome resources for various things.
So, by the way, if you are in the Dallas area, Mark is a great contact to network with, just as a side note.
Thank you for that. By the way, and Isabel had mentioned a networking event that I've hosted since 2008, once a month event called Constant Connections. If anyone is interested in getting added to the invitation list, always let me know. Great people are going to be there, like Isabel, like me, get you connected to folks that are marketing in the smaller to middle market business space.
That's awesome. So what can you say about insurance? And probably you can say a lot, but why is insurance so important?
Insurance is extremely important, especially for folks that are looking on the long-term care planning side, but really on anything that you want to plan and prevent a risk for. The time to get it is when you don't need it, so that you have it there when you do. Certainly, the earlier that you get any type of insurance, the better off you're going to be and the easier it's going to qualify for. That's really as simple as I can keep it. And really, it will depend on any of the type of insurance that you're going to get, whether it is life insurance, disability, or on the long-term care planning side.
So on the big ballpark of things, what are usually things that insurance agencies pay attention to and help to determine if you can be insured or not, if you qualify or not?
For most insurance that you look at, what will typically be looked at is first your age, certainly your health, and different risk factors that are involved. And the risk factors are different for each type of insurance that you look at. Life insurance generally looks at things that unfortunately is going to cause you to pass away, like something heart related or something that is going to cause you cancer related, something that's going to cause you at some point to have a higher risk to pass away. Disability and long-term care insurance looks at different factors. They might look at things that are going to keep you alive for longer, but maybe not have you give you the ability to work or have you in some kind of a nursing home. So there's different factors that the insurance companies will consider. The earlier that you get any type of insurance, the better off you're going to be, because then you can answer a lot of those health questions. No, but generally speaking, most people have some kind of health condition, and that's going to be considered along with your age to determine how you qualify for something.
Obviously, if you're already disabled, probably that's a big no that you can't get insured. So,
That's right. Yeah, and usually most people, when I ask what type of health you're in, most people are going to tell me, yeah, I'm in really good health. I'm in great health. And then when we start digging a little bit deeper and asking more questions, there are smaller health issues that they have that maybe they're not a concern. Maybe their doctor told them this isn't really a big deal. But when you're asking an insurance company to insure you for a large sum of money, it might be a big deal to them. So even the small things could be an issue when you try to qualify for any type of insurance.
okay, so if you don't have insurance, go get your insurance. And on the perspective of someone looking for insurance, what are things that you might want to consider?
There's a lot of different things on the life insurance side. There are three things that people will typically consider when they think of an amount to get. One is, do you want your debts to be taken care of? The second is, do you want future college expenses to be taken care of for your kids? And that's different for everybody, whether that's public, private school expenses, how much of that they want to cover. And last and most important is, what amount of income replacement do you want for your surviving spouse? That's a hard question to ask or answer, because most people, when we ask what your monthly expenses are, people really don't have a handle on that. So that's something we really have to dig deeper in, do some more research, and see what they actually spend. When you're talking to folks about disability insurance, this is really there for income replacement. Almost the same conversation on what do you spend, how much do you really need? Long-term care planning is a much more in-depth conversation. Most people have had some kind of experience with a family member or a friend that have had a cognitive impairment like Alzheimer's or dementia, or maybe have had a stroke and haven't been able to do the normal things that they do in the morning. And so a lot of people don't really have a handle on what it costs for a nursing home or an assisted living facility, or having somebody to come take care of you in your home. And really, it's an education of those expenses and what they wanted to cover. Because if they don't cover it, could put a big damper on a lot of the retirement planning that you do, and you can spend down your assets really quickly.
You mentioned that a lot of people don't have an idea regarding their monthly expenses, and I just cringed about it. Because I don't know how people can go through life without knowing how much they spend. So, what do you recommend when you're discovering that? Because I know, and at least for me, it is when once a month, when I check all my expenses, it's like I have to be in a really good mood. And it's like, okay, let's be brave. Let's see how much we spend this month. So, what do you recommend people to go through? Because I know it can be a challenge.
It's a challenge. And usually when we ask that question of what your monthly expenses are, people think it's like, yeah, we spend in a certain range. We have a simple budget spreadsheet that we use. A lot of people do it on their own. If not, it's just a simple category by category spreadsheet that we use. And once you go through that and you add those expenses up and you annualize them, it's really eye-opening for folks, because a lot of times it does not fit into that range that they had into their head. Um, and a lot of times when people talk to a financial advisor, they think, if I do this budget spreadsheet and I look at my monthly income, you're going to tell me to stop eating out, or you're going to tell me to stop traveling. We're not going to do that. You got to go out and you got to live your life. You have to have fun, but you have to do it within your means and keep your expenses within what you earn.
So, is there a way to remove the fear of putting like attention to that?
There's no way to remove that fear. I mean, it's with anything that you do. When you go to a doctor, you're worried that the doctor's going to tell you you've got a health problem. And when you go to an accountant, you're worried that the accountant's going to tell you how much you owe in taxes. When you go to an advisor, it's pretty common that we get the thought of, you're going to tell me not to spend money on whatever. You're going to tell me that we're spending too much. And that's just not the case.
I find that majority of financial advisors and people in this space are, I don't know, that's what you do. So you see so many different ways of spending money that you don't really get to judge people, or at least I don't perceive that from any financial advisor that I've met.
That's pretty common when we talk to folks, that people just have this inane thought that we're going to judge them for whatever they're spending money on or whatever they're doing. And that's not our job. Our job is to take into consideration all the information that we have and help folks plan for their own particular situation as best we can. If we were in their shoes, what we would do spending wise, financial planning wise, insurance wise, and give some suggestions and whatever options we think would be best for their particular situation.
So, what do you recommend in terms of going back to insurance? What is what you recommend in terms of substituting your income? Because obviously you want to leave your loved ones protected, but how much protection is it the right protection?
Always a question we get of what do you typically recommend for someone in this situation? And there's no typical. Everybody wants their insurance to cover different things. And I've seen situations where clients will come to me and say, I want my whatever amount of insurance I get, I want my wife to be taken care of or family to be taken care of, and then never have to worry about money again. And then I've seen it from the opposite of, I just want to give my family enough to bury me and they can worry about whatever their expenses are after that and anywhere in between. It's crazy to hear that, but everyone has their own thoughts on how they want to handle their own personal insurance planning and financial planning. And it really just comes down to how they answer a lot of those questions. There's rules of thumb on X times income to get in insurance, or rules of thumb on you want to make sure you cover however many years of income replacement. But really, there's no right answer to it. It's whatever's right for their situation.
I think I fall into just bury me.
Everyone's different, so you can't really answer a specific of what's right for somebody because we're all from different backgrounds. We all have different level of assets and have different levels of success and different levels of thoughts in our mind of what we wanted to cover. And so whatever that person's thought is what we typically plan for.
Is there a time in which people are not sure about it? Because if there's people asking questions, what is the normal range, as I just did? How do you discover what is your personal range where you're gonna feel comfortable paying the insurance? Because also that's a cost or an investment, however way you want to see it. On the other side, like how do you work with yourself to find that balance?
The first thing we do is go through that calculation to figure out the amount. But to your point, budget is the next thing we figure out. And if someone can't spend the cost for whatever amount we end up calculating, then it's not a good fit. So we have to make sure that whatever we're recommending fits into whatever their cost is and whatever they can afford to spend, because this isn't something you want to start paying for and then not be able to pay for in the future. So cost is the next thing. We have to make sure that we fit a cost within and make sure we try to get as much insurance as we can get for whatever the maximum amount is that will fit within their budget.
Is there a way to protect this insurance, like let's say when you're out of a job?
In terms of making sure that it still gets paid for?
Yes.
Not typically. I mean, typically there's some disability insurance policies that may be able to have an unemployment benefit on there, but for most insurance, that's why we want to make sure we plan the cost for something that's comfortable within their budget, that God forbid something does happen, they can still continue to pay for it.
Yeah, because you never know what's going to happen. And what I've noticed with life is that you usually receive several sets of bad news within a very short period of time. I don't know if you've ever noticed that.
Yeah, it usually happens in threes, right? Um,
Yes.
But if we do our job on the financial planning side, we make sure that our clients have enough in emergency fund savings so that they can withstand some kind of a job loss for a certain amount of time. And the rule of thumb there is anywhere from 3 to 12 months of expenses on hand. Some people are more conservative and they want to have more cash. Some people are okay with having less cash, but at least 3 months so that you can withstand some kind of shock to whatever system that you have personally, whether it's a job loss or whatever it might be. So you've got that cash liquid that you can spend to pay for certain expenses like insurance that you don't want to give up. But unfortunately, when bad times happen, insurance a lot of times is the first thing to go.
Is there a way to recover that insurance once you let it go, or are there big penalties for it?
Typically not. There's what's called a reinstatement provision on an insurance policy where you've got a certain amount of time to reinstate or put that insurance policy back in place. Depending on the amount of time that's elapsed between the time you let it go and you pick it back up, you may have to go through what's called the screening process again, your personal and medical history, and has anything changed since you originally applied and when you're reinstating the policy. And sometimes it's just better to get a new policy in place. Sooner that you pick back up paying the premiums, you may not have to answer as many of those questions. But the longer you wait, the more questions you're going to have to answer, because an insurance company is not just going to put something back in place and assume that you're in the same health. But there are ways to do it. It's just a matter of the time that's elapsed since then.
So, okay, so you figure out how much you want. And I find this so hilarious because a lot of people don't communicate this to their loved ones. They're getting a life insurance or whatever type of insurance to protect their loved ones, and then they don't let them know that they have it. Why do you think that is happening? And how do you support clients to that?
Pretty common in a family where there's one spouse who knows the financials and one that doesn't. Whenever we try to do our planning, whatever planning that is, we try to make sure that both husband and wife are present. Or if kids are beneficiaries, we try to make sure we connect with any kids or family members so that if something does happen, we know who to reach out to. But that is one thing that's typical, that there's one partner in a marriage that's responsible for the finances and one that's like, hey, Isabel's taking care of that. She knows where everything is. I'm going to be okay. And then the reality is something happens to Isabel and they have to scramble and find out where everything is. So it's better to make sure that both are involved in that planning process.
Because all of my important documents are in one folder. And when I told my husband, hey, if something happens to me, he was like, I don't want to listen about it. Well, I don't care if you don't want to, but if I break my leg somewhere and you need to get my medical information, you come here because I won't have head to tell you then. And this has been something that after my dad's passing and all the drama that came after that, I think my mom became very aware of like, I need to share this information with my loved ones. And she has been good about it, but I don't see that with my clients in particular. They don't share that. And a few months ago, I learned about this couple. They knew about each other and they had been paying a life insurance for 40, 50, I don't know how many years. The wife passes away, dad with Alzheimer's, POA, the financial power of attorney, decides to consolidate all the bank accounts. One of those bank accounts that got closed was responsible for paying the life insurance. Dad passes away. They start opening and figuring out all the documents, and they see that they had that insurance. So they lost 50 years of life insurance just for nothing because they didn't communicate. So do you...
It happens a lot, by the way, just for not communicating. And especially when you have something that you're just paying for automatically, you almost forget about it. And then in a situation like that, where you change the bank account, that sometimes does happen, where you see a policy getting lost. And if there's no life insurance agent or advisor that communicates with them, they might not be able to get that back, because when you bought the policy at 35 versus your health at 75 or 85, what you asked earlier, that's probably not a situation where you're going to be able to put that back in place.
Well, the dad had already passed. The family lost, I don't know how much it was, but, and I think they were insured for enough money to put all the grandkids in college, if I remember correctly. So it was a good amount of money that could have put the kids in a great advantage because college would have been paid for them.
I mean, we get notifications from companies when clients miss payments. If the advisor is no longer in the business or has passed away, maybe there's no contact to reach out and let them know that if you don't make this payment, the policy is going to terminate, and you might not be able to get it back, especially if you've had some health changes or if you're a lot older. So proactive communication is great when we get those communications from the insurance companies, but sometimes that's just not possible if you don't have a contact to reach out to the family, and that's a horrible situation.
Yeah. So how often do you recommend keeping in touch with your insurance advisor?
At least once a year if you can. Some insurance policies are low maintenance where you really don't have to talk to somebody for a long amount of time, but I would say at least just to check in once a year. We've got clients that want us to reach out at least quarterly. Got clients that want us just once a year, and then we've got clients that don't want to hear from us maybe once every 5 years just to make sure that everything's okay. However, there are certain things that happen, like your situation. I've had a lot of clients go through identity theft situations where they have to change wholesale all of their bank accounts and all of their information. And sometimes they forget to change things that they pay automatically. And so I'll get those notifications and be able to reach out to them and make sure that that insurance does stay in place. But I would say at least once a year to answer your question.
So what else should you check once a year in terms of financial wellness?
Definitely make sure you've got enough insurance. It's also good to just do a quick cash flow check, income versus expenses, to make sure you're not spending more that you make. And if you're not, and there's some kind of a surplus between your income and expenses, making sure that you know where that surplus goes. If you have an extra $500, $1,000 a month, are we spending that? And if not, we really should make sure that we save that so future Isabel is in much better shape because she saved that $1,000 a month or whatever that savings is.
Yeah, 'cause even if it's $100.
Even if it's $50 a month, whatever it is, it helps. And as long as you are spending less than what you earn, you're going to be in a great shape and you're saving along the way.
Yeah, I think I'm not sure, and probably you know the numbers better, but if you're paying your mortgage for 30 years and you put 50 additional dollars per month, that will save you like 3 or 4 years of.
Anything
I don't
extra.
know I don't know the exact number, but I know it's something ridiculous.
Yeah, I don't either. But yeah, if you spend pay down a little bit extra towards your principal, and maybe if you make one extra principal payment, or if you save $50 a month towards your principal or whatever it might be, you'll save when you look at the amount of interest that you save, you'll be amazed. And I think that's when people start doing $50, then they think, oh, well, this is what $50 a month is going to do. Maybe I'll increase that to 100 or whatever it might be. So there's a lot of different calculations that go into it. But the more that you can pay down debt and not owe anyone money and lower your expenses and start saving more money, you're going to be in much better shape.
Going back to insurance, can you change insurance companies with the same sort of conditions that you had? Or with your car, you just change the insurance and that's okay. You renew it every year. The same happens with your house. You can shop around and figure out which insurance is best for you. But I don't know if that is the same for health and for life and disability.
Going to look at a lot of the same risk factors, like on an auto or home insurance. They're going to look at how many accidents you have, or have you made any claims to get a new roof or something like that, and what the risk is to insure you for those two things. Like we have two teenage boys, and teenage boys when they drive. Unfortunately, historically and statistics wise, they get into the most, and they've been great drivers, but cost wise, that's really increased the cost of our insurance. The same goes when you look at life, disability, or long-term care insurance. If you have any health risk factors, it's going to cause the cost of those policies to increase. And if you do decide to change companies, you have to make sure that it makes sense to do so. And can you qualify for a new policy with your personal and medical history, that there haven't really been any changes or any major risk to your personal history that are going to cause those increases in cost. And so before you do that, you want to make sure that you have that information, you have the numbers of what the cost might be to see if it actually makes sense.
So basically, once you get a life insurance, you're sort of married to that company for life.
You don't have to be. Some of the policies are temporary where you're going to change that policy at some point. And just like you shop around for your home and auto, you can shop around for your life insurance as well to see if you do better, because maybe your health does improve, or maybe for some reason you are in better fitness and weight and height and weight shape. Maybe you've got a health situation that gets better over time that you might be able to qualify for in a better way. So there are things that can improve, and there are policies that are temporary that you're going to want to look at a new policy with a new company that's a better fit for your situation.
Is there anything else that you would like to share with people that you believe is important for them to know?
So no matter what age anybody is, I always bring up for people to think about long-term care planning. Doesn't have to be with insurance. It can be just knowing what the costs are and where the costs are going to come from. I went through a situation with my dad about 13 years ago, got diagnosed with dementia and was in a nursing home for 3 months, and I had no idea what the costs were. And thank goodness he had an insurance policy that covered almost all of those expenses, because I don't know what the financial ramifications would have been on the assets for my mom. She would have spent down her assets a lot quicker than if she had an insurance company that were covering those costs. So just knowing what the average costs are for that type of planning and that type of care is extremely important, no matter what age you're at. And if you're at a younger age, you might see this with a parent, or if you're at my age or older, you might start to see what those costs are with experience. And the more you know, the better off you're going to be, that you can actually plan for this so that you don't have to spend those costs out of pocket. Maybe you can have something to take care of it, or maybe your assets are large enough that you can pay for that out of pocket. That's something I'm bringing up in every single conversation with clients, whether they're asking for it or not, just so they know what to expect.
FYI, this is how much it costs. I just want you to know.
Usually it starts off with, have you ever had an experience with a family member that has a cognitive impairment like Alzheimer's or dementia, or has been in a nursing home or an assisted living facility? The majority of the time, people either have or they know somebody that has. And then I ask questions about, well, how was it paid for and what was the cost? And a lot of times people are actually really surprised at what the actual costs are. And it just leads to more conversation about whether that's something they want to plan for now, or if it's something we want to table and talk about at a later date.
Well, thank you so much for coming and sharing all your knowledge with us. This was wonderful.
Thank you, Isabel. Always great to talk to you and see you. Thank you so much for having me.
Of course, wishing everybody out there a wonderful Friday if you're listening this on a Friday, or if not, just a wonderful rest of your day.